Hi, welcome to 22107 Accounting for Business Decisions A. Today, we're going to focus on financial statements, but in particular, the statement of financial position, also known as the balance sheet. So what is the purpose of financial statements? Well, the objective of them is to provide information about the financial position, performance, and changes of a business. This information is useful to a wide range of business stakeholders in making economic decisions, including the future of a company. So the statement of financial position is such a long and laborious name, but it provides critical information on a business in its current status. It questions what a business owes and what it owns. A statement of financial position reports a business's assets, liabilities, and equity at a specific point in time. So A equals L plus E. This is the accounting equation, and it means assets equals liabilities plus equity. A. Well, it doesn't stand for apple, and it surely doesn't stand for ant, so it must stand for asset. An asset is an economic resource of a business that is objectively measurable, that results from a prior transaction that will provide future economic benefit. Cash is a great example. Others include accounts receivable, supplies, inventory, equipment, and even property. L. Well, it's not light, so it must be liability. A liability is a company's debts or present obligations that are owed and must be paid. They will require the sacrifice of economic resources at a future date. Some examples include notes payable, tax liabilities, and provisions. And E, well, it must stand for equity. And equity is the amount of financing provided by the owners of the company. Examples include contributed capital, which is the contributions from owners, dividends, and retained earnings. So how do we record all of these items onto the statement? Well, it looks like this. Notice at the top, you have the title of the business, what the statement is, and stating the specific point in time. Then you have all the assets, clearly labelled one by one, with a total at the end, followed by liabilities and equity. Now, assets equals liability plus equity, so your total assets is the same number as the total liabilities and equity. The importance of the statement is critical. A business's assets will always be claimed by someone. Either they are owed to someone, in this case the bank, or claimed by the owner. No assets of any business will ever be unclaimed. So in summary, today we've learnt the accounting equation. Assets equals liability plus equity. This equation is used when reporting the financial position of a company on the statement of financial position, also known as the balance sheet. And there you have it. Now you know the purpose of financial statements, the statement of financial position, the accounting equation, followed by assets, liabilities, and equity.